how do we understand where the market should go? First of all, we have our volume mat price or volume profile, which let us know how the market is developing. I just want to analyze live, not live, but as this trade unfolds, what we should be doing. First of all, I want to be sure that this is calculate on bar, it's on bar close is on false, because we want to see how it develops in real time. We'll wait until this is completely loaded. Okay. Sorry. So the very first thing that we need to take a look here is that we want to trade our initial balance, and also we want our initial balance extensions, which are 1.5 and 2 times the lower and also to the higher part of that initial balance range. So after that, we want to watch these levels pretty close. The resistance one's upper boundary and lower boundary, which of course is a mathematical calculation here. And we also want to look at these levels, which are going to be tested if we see volume being built in the volume profile. As you can see here, we are able to look at this value area, which is this area right there. That's the value area. It's right in the middle with two profiles, as we can say. I mean, we have this bell shape here and we have this one here, so we have a double distribution, and in reality it's a triple distribution because we have another one down here. And after we have established our initial balance, which is the first hour of the market trading at the US market open, we want to start looking at for our opportunity. So what we can see here in the BlayFi Concord indicator is that smart money, which is the blue line and zone there, it's below the zero level. That means they are trying to bring the market down because they want probably to buy a discount. So we expect the price to come down to this level here. So after we have established our levels, which we have our weeklies and our dailies, then we look at the Blay indicator, Concord indicator, and we know that the green line and so on, it's the retail traders, and the blue one, they are the smart money. The brown here, or orange, is just the market direction. And then we have our volume, we have our first deviation, second and third. So that means we have a lot of volume there. And we start seeing the price to come back down. And of course the price came down all the way down to our level. Our level here, or this is level there. But we want to understand, using our Fibonacci, what are they trying to do. And we measure with our Fibonacci tool from this level here, that's downside, to this upper side. That will give you your upper levels, and you can also draw your lower levels at the same time. So in case this market goes down and breaks this lower boundary or that initial balance low, you will know where it's supposed to go. I see that if the market goes down, I would expect to try to break it and then to test this here and then go back down, and probably our first level to test will be that. And if it's broken, it's gonna go all the way down to the 76.40, which is where we have high volume. We don't have volume there, but we have this low RMS level. So that would happen if the price breaks down. But what happens if they are selling because they really need a discount because they want to go up and bring this market up? So what we expect is that the price stays around this level there. Why? Because that's a pretty important level, or zone, where there has been a lot of trade, so volume has built up right there, and we want to be careful at that zone right there. So we expect the price to go down and that movement be sustained by that. As you can see, it's bluish right there. It's all that zone, which is telling us that there has been a lot of volume of that part right there, and so the price could find some support at that level. So where should we go and open a trade? Next thing that I want to point out is that volume is increasing, and the next level is right there. So that means that we could be building. You can see this wick here that was built with the volume above the standard deviation, and then we have our market going up. So that zone proved to be strong, a lot of pressure, a lot of volume right there, and this wick here let me know that there was some buying pressure to that zone there. Also, we have our Concord indicator going to positive zone, so that means that smart money, it's coming into the buy. And so we have the retail traders and also the smart money positioning themselves and to go higher. So where we expect to go long is on this level there, or 76.40%. That was 68.13, which is not correct because this goes 25 quarter point, so that would be 74.6850. That will be our entry, or 25, whatever you feel comfortable. And then we expect the price to at least go to the 0%, or that's the initial balance high, and that would be a trade that is worth 68 to 75. So 75 minus 68, there'll be 7 points by 4 ticks that have a point that's 28 ticks by $5. That's $140 dollars per contract, and if you're trading as I do 5 contracts, that's gonna be $700. You could stop there or you can wait to see if volume increases here, which there is no volume. As you can see there are no volume, so the market could attract volume to go higher that level. If we break that with high volume, that would be a very important and a strong sign that we are expecting to go high. And our next level is that prior week high, and then we have our levels of the Fibonacci retracement level there. That's the minus 38.20%. So that means that if we break this initial balance high, we could expect go to prior week high and also go to this level here and this one here. So then the price our entry level is filled, and our stop loss should be down here at that point. That's 74.60. That's 3 points. No, I'm sorry. That's 8 points below our entry. 8 points below our entry. Or you could use the 61.8 percent level to set your stop loss, and then wait. Here you should manage your trade, since we got filled here at 74.68.25, and then market brings volume into the system, and we have smart money with retail traders volume going up, so that means they are supporting that move. And then we test the prior week high. There is a minor retracement there, but volume is strong. It's very similar to the prior candle. That's a good sign. Anyways, we have a wick there. So then we have a hammer in the middle of that move, and we have volume built there, as you can see right here. So that means that there was less volume, as we can see there, but it was in the volume at price at that level. That was a lot of volume being built, and that level is pretty important, that 82.25. And then we have our candle go pretty. It's a very interesting move, since we see here in our left, that's the daily volume at price profile. That's the daily, and this is the cumulative. Sorry, this is the cumulative, and this is the daily. So we are looking that there has been higher volume here been built, and we know that when we have this distribution shape on the top, that means that there has been a lot of up move, but then we expect a reversal. So be careful with that. We expect now we went to 61.8%, and that's a lot of ticks been traded. So if you measure from our entry, which was 74.68.25, all the way up to our initial balance second boundary, or 2 times the higher. Let's say we went to the 61.8%, and we were managing our trade, moving our stop loss, and right to that point, 1 tick or 2 ticks below, and then we expect that thing to go up. That will be 24 points by 4 ticks a point. That's 96 ticks by $5 a tick. That's $480 a contract. buy 5 contracts as I do, that would have been a $2,400 dollar trade. Not bad for a almost 20-minute trade. We saw that there was volume coming in here. I like this pattern because that let me know that they are dumping trades, trying to bring down the market because they really want to participate into this move. And so don't be fooled. They bring the markets down. They were interested in this zone here, so they were buying here. As you can see, they were buying. The important the alert came there when the retail trader went down below 0, and the smart money kept buying above that level. So that means that there is institutional money being put into the market here because they were expecting a move up at the US market open. So that's pretty interesting. I like that. And so they fooled here, trying to bring in, retail traders, thinking that they were, putting pressure to the downside. But what they really wanted is that they wanted to buy at discount. So they brought the prices down, and they gained this 6 to 7 points, and then they buy at this zone here, right when they crossed. They buy here. As you can see, there was lots of volume transacted here, lots of contracts, and also they bought down here where it's the point of control for the composite volume profile. And after that, well, the price went up. So that's a pretty good trade. I like that. So this is how you use your Fibonacci's levels. If you want to see my settings, you can see them here. You can just pause the video and then set these levels into your Fibonacci retracements properties in your NinjaTrader platform. And you can do this every time you're analyzing the market. Just don't forget that you have to go from down to up the first time to establish these levels here, and then you have to go from the upper boundary to the lower boundary down to establish your lower levels, because we never know where the market's gonna go. So that's pretty awesome. I like that. Let's take a look at the prior day. This was also a pretty good move where we can combine initial balance with extensions and levels and divergence. So the very first thing that I noted here was that if you see that resistance 1 upper boundary was right there where it was established at 8:30, where it was established the upper boundary or initial balance high at this blue line there. But adding to that, we had divergence. We had a high with less interest in retail traders and less interest in smart money. And also there were no volume. They were trying to bring that up to the third standard deviation, which is telling me that something is happening, but they were stopping that move up. So then we have this shooting star followed by another shooting star right there. These two candles right there. So let's say we set our sell entry order right at that level. That's 74.68.50, and how it's working with our Fibonacci. This is our upper boundary going down and to that zone, and then we have our upper levels. So we had a confluence zone there with a 50%, of course, because that's the middle of the zone. But the important thing here is to know where we have volume been built at this point. It's right that as you can see, the volume moves. So let's study that move. The first thing is that we have the profile, the distribution right below, right at this point. If we have that, and then we have a shift in the volume in the value area going to the upside, that means this is a heavy zone now, and we don't have volume in the middle. There's nothing there, as you can see. So probably they will want to bring these prices down since we have divergence. That's what I like. Okay? We have divergence in our momentum indicator, we have divergence in the retail traders indicator and in the smart traders indicator, and then we have divergence in the price, of course. So that meant that this trade was exhausted, and so it went down pretty hard. They were trying to break and stop this move down right at the 50%, and but how we know that this level is not gonna hold? We know when there is no volume there. There is no volume at all. Compared with other levels, there are no volume there. As you can see, here is a very high volume. Here is a very high volume. Here, very high volume. Here, here, and here. So it didn't held there, and it went also to test the 61.8%, but this volume level was pretty much it was like 75% of all those upper levels. So then we have this pretty hard move with high volume. We saw increasing volume, so that meant that they were putting pressure there. Also, there was a news that I think it was Manafort that was some sort of news about and related to Trump and all that. So that pushed the markets down. But that's just to say that how we understood that this will fail, because there were retail traders, trying to buy into this price, but the smart money was selling at this point. They were dumping their trades because they understood that there were no value at this price, and so since they started to sell, we see here, and then stop losses were hit, and that pushed the market down, and then there was some of selling pressure coming into the market, as we can see in the volumes that was increasing. So that was a pretty good trade. I like that trade. It meant that as you can see, this is the daily for the day profile. So it was a lot of transacted volume there, and then came to test a little bit that lower part. But as you can see here, that's what I like about this indicator. Retail traders started to sell at this point in this bar and this zone here. They started to sell. They were trying to push the price down, but they came late to the party because smart money was starting to buy and to dump their short trades, so that pushed the market up. And after that, well, what happens is that retail traders start to reverse, and then the price went up. So this indicator helps you understand when retail traders are coming late to the party, and how to understand when smart money it's bailing out of that positions. So I hope this can help you. We have opened a new channel with a new course, professional trading course. If you want to take a look at that, I will put that into the notes below the video, and so you can find out there. Thank you.